What is up, YouTube? Qui-Gon Jinn here, and I am back for some more updates on some charts for you guys. So, welcome back to the channel. Make sure you smash up that subscribe button if you haven't already. If you want updates from me, if you don't want updates from me, don't worry about it. But if you do, smash up that subscribe button and ring a ding ding dingity dong that bell until there's a freaking crack in it. Anyway, you can also follow me on Twitter over here, or X, whatever, if that's what it's called now. X, Twitter account Qui-Gon at Qui-Gon Jinn. Alright, so anyway, let's get into it. I am gonna give you an update on the US500 weekly candle body close. So this I'm not even gonna sugarcoat it. Like, this candle is bullish as fuck. You had this big drop down, right, and then it bought back another almost 5%. You've got this super duper long wick. Remember I was saying I was watching out for like around the 5,000 area, just above, in case if we had lost 5,200. That's the area you want to look at, your last saving grace or whatever. Ended up bouncing really hard, not exactly off of 5,000, of course, but ended up bouncing really hard. And now you've got this beautiful sort of hammer formation on the weekly candle. And I think that's pretty powerful. That's a pretty powerful candle. I'm guessing that a lot of people got shaken out of the market, and then there was some massive buybacks. So you bought all the way back up. You did end up at the, from the high of the week, you ended up coming down about 5%, and then you bought all the way back up, almost nearly 5%, 4.8%. So that's a lot of price action. That's a lot of price action for the S&P 500 in the past week, to go down, to dip that hard in the past week, and then buy back up in the past week. And this was a big dip, guys. Like, this dip was, really nothing to just, not be affected by in some way. It's a pretty significant dip. But I did want to mention that, like, with the S&P 500, in a bull market scenario, 8 to 12% dips are normal and pretty regular. Typically the correction, when you're in a really strong move like the one we saw over here, this is just like such a really strong move. There was hardly any corrections. You finally got that big one. And now we're getting another one of those. So yeah, it was pretty dramatic. But, I mean, these types of dips do happen. So we're back above. You ended up closing above the bull market support band. So both the 21-week EMA and the 20-week SMA. And I was a little bit concerned when we did fall below it. When we fell below the 20-week SMA, that, it was going to be a bad sign, whatever, if we came up and rejected from it. But we didn't. We ended up closing above it, closing above both of them. So that's also a bullish sign. You're still above the 50 weekly SMA as well. And you're above this anchored VWAP, for whatever that's worth. So I mean, a few bullish signs. From the top up here down to the local low, it was a whole, in its entirety, about 10% drop, like 10.2% drop. And as I just said, sort of these 8 to 12% drops are normal in the S&P, within a bull market scenario. You start getting into like the 14, 16% area, it starts to get sketchy because realistically you only have to drop as much as 20%. At least the rule of thumb is if it drops 20% from a local peak, then you're more or less showing the signs that you're going to go into a bear market after that. Now this is just for really like the S&P, but or yeah, I guess you could apply it to the other indices as well, like the Nasdaq 100 and the Dow Jones. But I mean, for the S&P, if basically rule of thumb, you drop 20%, you're pretty much going into a new bear market. It's very likely that you're going to put in a lower high after that on the bigger time frames. So we haven't done anything close to that in a long time. So we've got 10.2%. I mean, this is really, I think, the first double digit correction, like double digits as far as double digit percentage. I think this is probably the first double digit correction that we've had since last year. I guess if you count this whole thing, right? That's 11%. So yeah, from July to October of last year, July to October of 2023, you did have an 11% correction. Well, you damn near did that right here, almost an 11% correction. Only this happened in 3 or 4 weeks, as opposed to a few months over here. So big difference, obviously very dramatic. I mentioned around these times, like, whereas they're talking about potentially shifting monetary policy, we are getting it's a presidential election year. There has been a lot of talk on the streets about the candidates for the presidential election, and I don't want to get into it. I don't really want to get into politics on the channel. I'm just saying there is a lot going on there, like politically and with monetary policy and all kinds of stuff like that. So and like the global macroeconomics, we've got conflicts happening and shit like all around the globe. There's all different kinds of conflicts going on. So we've got all kinds of global conflict on top of all this stuff too. So it's going to create some serious volatility. But also, just keep in mind, volatility creates opportunity. And I still believe in the macro bull market thesis, at least as of right now. Like, I've not seen enough to change my mind. Like, could this have been a significant top? Yeah, I mean, but you just saw a 10% correction. So we got our double-digit correction. It's still pretty well in line with, other corrections, like that 8 to 12% rule. So, I mean, if you take it from here, like, yeah, there was these just go down to the daily real quick. 10.2%. This one in its entirety was 6.64%. If you want to split these up, I guess you could say that's 5.8% from this peak down to this one. That's 7.5%, so it's just just a 0.5% less than 8%. And then you get 6.7%. So less than 8, less than 8, less than 8, less than 8, but all together over the course of, how many days was this? 92 days, so yeah, 3 months, just about 3 months. You had an 11% correction. Now, even though 11% corrections are normally accepted, in bull market scenarios, it's tough to say what actually puts you into a bull market. Where does the bull market get started? You could say that it started from down here, but to be honest, it really didn't start till right here or right here, and it was even still questionable at that point because you had yet to break back past the 0.5 fib level. So it was questionable even at this point, even though you had made a higher low. You hadn't made a higher high yet here. So this swing high was lower than this one. You were still technically trending down, honestly. If you really want to get technical about it, you were trending down until about here. So it's arguable because you've got all of these lower highs. You've got lower lows, lower highs, lower lows, lower highs, lower low. This was the first. You did reject off this trend line again one more time, but this was the first higher low that didn't take out the local bottom. And then it did it again. This yellow line, I have an anchored VWAP here drawn from, the lowest low, obviously, and it bounced off of it now and held support not only once, but then a second time here, and also sort of found support at this on the other side of this trend line. So the top side of this descending trend line, it came back, retested the top of it, shot up, challenged the 0.5 fib again, and eventually broke through it. And then this is where everyone was kind of shouting that it was in a bull market. I mean, I remember this being around the time where people were starting to say on TV that the Nasdaq is in a bull market, yada yada. But you had all that semiconductor shit going on, and with the shortages, they had a shortage on the chip shortage, and they didn't have silicone and whatever else. They couldn't make the chips, and then there was like China and Taiwan were fighting and stuff. So there was a lot of stuff going on with the semiconductors. They ended up blowing up. Actually, if you look at, I hadn't planned on bringing this chart up, but if you looked at, what's a good one, like SOXX, no, this is 3X's. All right, iShares Semiconductor ETF. We'll just look at that real quick because this is like the BlackRock IBIT one. So I mean, this thing was blasting off. Like these semiconductors were just blasting off out of this bear market here, and they were really sort of carrying the Nasdaq up. And this has been pushing the Nasdaq, but a lot of these companies are also very heavily weighted in the S&P 500 as well. So, like basically 10 stocks were dragging the S&P, the Nasdaq, and the S&P 500 up. One of them being Nvidia, obviously, and then there was a few other semiconductors that they went heavier into. There was more heavily weighted holdings in the semiconductor sector. So anyway, long story short, you had this blast off here. So we don't really need that chart anymore. So just back to the US500 real quick. I guess if you say, you could really say, like, realistically, this is when the bull market started. And then you could say it was confirmed here when it broke through the 0.5, came back and retested this level, and then held it as support. I like to think it wasn't really a bull market or a confirmed bull market until right here, because you then had two consecutive higher lows, and you then had a higher high. So you had this. This was your first sort of higher low from this swing low. And back then, you could actually say that, you kind of rejected a little bit from it. But anyway, I'm just trying to point out I'm not trying to stretch the line. I'm just saying this was your first real higher low that didn't result in the previous low being taken out. And then this was the first sort of higher high that you got that resulted in a higher price than the previous swing high. So after those two things happened, if you then followed it up by getting another slightly higher low, breaking this downtrending line of resistance, coming back, retesting it, and then bouncing. You also bounced off the anchored VWAP. I'm sure there's several different reasons, that you could come up with as to why it ended up reversing there or whatnot. This is just a technical standpoint as far as what happened with the S&P 500 at this time. And so these, if I go back a little bit, I'll show you sort of what this bear market looked like from when they started, raising interest rates and stuff. You did get more than a 12% correction right off the bat, when 12% is supposed to be sort of the threshold, right? And so that was sort of the first red flag. You kept getting 11% corrections following that from the previous peak, and then you got this bad boy. This is the bad boy that really wrecked everyone, and I'm pretty sure that right around here was when there was that Russia Ukraine, that I'm pretty sure that started somewhere around here. I'm not certain. I'd have to go back and fact check that, but I'm not certain. I feel like I have a feeling it was here. But I mean, look, you had a death cross on the daily. You were closing below the bull market support band, and there was a shift in monetary policy because inflation was out of control. So we had a lot of problems back then, right? And we were just coming out of the pandemic, so a lot of shit going on. This was almost an 18% drop. So if we're to take this from the top, you have your 20%. You have your 20% there, and this is when everyone decided, okay, we're in a bear market. I mean, more than halfway through it, after it's more than halfway done, this is when everyone decides we're in a bear market. So anyway, just to give you an idea of how much bigger the corrections are percentage wise from swing to swing in a bear market than they are in a bull market setting, which I believe we are in, and we are still in it, and I haven't seen any evidence to assume otherwise just yet. This is more than 12%, that's 13.5%. And then if you have this swing low or this swing high to this swing low, that's almost 20% right there. That's 19.5%. So I mean, in the interest of preserving your capital, it would have been good for you to just sort of cut any losses and then reapply either somewhere down here or at one of these two levels. This correction right here ended up being 9%, so a bit less severe, right? They started getting less severe, and you started climbing up after making these, sort of first higher low, first higher high, and then second higher low, then 9.2%. So less than 10% there. And then we already did these ones up here, but just to quickly, show you there again in its entirety. And this was up until now, this was the worst correction that we saw. If you're counting wherever the bull market started, if you count it from right here or right here, it doesn't matter. Similar prices anyway, right? But this is the biggest correction that we had until now, which it still is. It still technically is, and maybe the one that we're in isn't over yet, but it's not quite over. Maybe we have one more lower high and another lower low to come in or something, and maybe it does end up being slightly bigger than this one. But so far, the only real significant correction to speak of was the one that happened here back in April, where you came down to 6.6%, and it got right back up. It got bought right back up. You ended up putting in a higher high, flipping this 5,200 area, and then just skyrocketing it off again until you ended up hitting that 5,600 618 fib level. So it is a significant correction, but I'd say it's a dip buying opportunity, especially since you are still above the 200 week SMA. I mean, back here when things started to get sour, you were already losing the 200 week SMA. You had this death cross here, but you were already starting to lose it and close uh, bodies below it. Sorry, I don't know if I said 200 week, 200 day, 200 daily SMA. You were starting to close candle bodies below it. And then you ultimately ended up rejecting one last time here and falling. So 200 daily SMA, the fact that the price is still above that, and you did just close above the bull market support band, I think it's a pretty good sign. And I know that these trend lines are kind of wacky, but I wanted to mention this just real quickly. I know this is supposed to be about the weekly candle body close. So, I mean, I just want to say that this is a hammer. That is a bullish candle stick pattern. Usually, most bullish at the bottom of a trend, which is at the bottom of the trend. We don't really know that yet. I would say there's a good chance that, given how dramatic the drop was and how aggressive the buyback was, I'd say there's a good chance that we put in the low for this particular pivot before we start to continue to charge back up. That's my opinion. I'm going to stick with it for now. I'm going to see how the price action reacts next week. Because honestly, some things on the lower time frames, it was looking pretty brutal still, losing 52 and with this rejection wick on the daily. But then you had this massive bullish engulfing candle the next day, and now you've got this second consecutive daily close above the 20-week SMA, along with the 21-week EMA. So you two bodies in a row closing above the bull market support band. You are kind of coming into contact with this downtrending resistance line, though, and I know it's weird the way that it's drawn, but I mean, how the hell do you even really draw it? I guess you could kind of draw it from like right here or something. I don't know. I'm just trying to find like good points of contact where it makes, because you had this deviation above before it lost it again. So you are kind of more or less coming into contact with that line again, which is a little bit concerning. You've got your 200 SMA on the 1 hour there. But let me put it back the way that it was before real quick, because what I was looking at on the chart was it's coming back into contact with this line. Basically, it looks like it sort of wicked off there. So I don't know. I mean, maybe it's like I've been referring to it as the crudely drawn trend line because it's really it's been tricky trying to find a spot to put it. Like the trend lines haven't been clean lately or recently. So anyway, just be aware that you are coming into contact with that line there. But if we can somehow, so even if we sort of reject, but you come down and you hold the 21-week SMA or EMA, bull market support band, whatever, that's what it's called. If you hold the bull market support band and then you break this level and you flip the 200 SMA on the 1 hour, you're probably likely to see some continued momentum up. We can test that 54 area. So that's kind of just what's on my radar for right now. It's good that we're above the 50 on the 1 hour as well. I don't really want to go any lower than the 1 hour, honestly, and I will, I guess, check out the oscillators real quick. Couple of these, I mean, you're kind of getting, these are kind of making me feel uneasy while you're getting into contact with that trend line, but the daily still looks pretty good. It would be better if the RSI was above 50, but you've got this stochastic cross up, and you're almost back above 20 with both of them. You've got two like lighter histogram bars now on the MACD. You got the bullish engulfing candle, and then this other one closing above the bull market support band. So I'm just trying to scan through real quick to see if there's anything that is eye catching. So anyway, I don't know. That's the S&P 500, the US 500 weekly candle close, and I don't know. So far, it looks bullish to me. I like to see when I'm gonna try to keep up to date with, like, some news and stuff. And I will have to keep tracking this and keep an eye on it, and at the very least, do another update next week. But for now, the markets are closed, and they're not going to open up back up again until Sunday night, the earliest for the futures markets, and then after that, the real stock market, the New York Stock Exchange, doesn't open until 9:30 a.m. on Monday. So this chart's going to stand still for right now, anyway. But I'd like to start doing a weekly update on this chart, even if it's only once a week. I want to try to at least do that. So anyway, I want to do just a quick update on Bitcoin. I want to try to keep it brief and not go too in depth, but this trend line here. So we talked about this downtrending line, and again, like, this one sucks too, because it doesn't have it has these deviations above it, and then these don't really make contact exactly, but it's really kind of more of a zone anyway. It's not usually just one line, or I try not to see it as just one line. It's kind of like, I think, like, I try to go more so like zones. And I will go through at some point on the channel and discuss that, like, in further detail, but I want to just kind of try to get this wrapped up. So anyway, broke this trend line, and now we're sort of tracking this one and following this one, because it seems like, obviously breaking to higher lows, higher highs and stuff. The trend, at least the short-term trend, has certainly shifted to the upside. And this was what I was kind of anticipating after the sort of capitulation sell-off that happened in this area. So to recap, we did hold above 55k, broke this level, held it as support, and then we pushed up to, I had mentioned the 61,350 area, and then this other one, 62,380. I don't know if I mentioned that as a pivotal point or not, but I'm sure that I'm sure it must have been on my chart for a while. So even if I hadn't mentioned it, there was some evidence there that we might be meeting some resistance. I mean, even just these really local ones here, a few pivots there. But so anyway, what I wanted to point out, I'm going to try not to get too off track here. What I wanted to point out is that we're coming into contact with that trend line right now, and you have been above 60k. I was saying it would be great for Bitcoin to be able to flip 60k and stay above it, in order for another push up to potentially this anchored VWAP here at like 64.2. And I'm just kind of going in steps, guys. Like, I'm not giving my like ultimate targets, because if I do an update legitimately like every day, or even if I start doing two, I'm gonna wanna just mention the more immediate price targets rather than the ultimate, like, oh, this is how high I think I expect it to go. And honestly, it's like, I don't know how high or how low each pump and dip is gonna go. I mean, I have tools that could try to help me figure it out and try to give me some clues as to what happens when we get into those areas. I'll have some clues as to what might be happening, whether or not we're more likely to break through or whether or not we're more likely to reject. If we do reject, where the next point to hold is. So, like, I mean, TA is like, it's not about really knowing the future, what's going to happen, because anything could happen. Realistically, anything could happen in the market, and that's something that you kind of got to accept as a trader, and just mitigate your risk as much as you can, or understand how much risk you're willing to take, and how much of a loss you're willing to accept if you do end up being wrong. But anyway, been on so far a decent roll with Bitcoin over the past few months. So now that we're above 60K, we've been consolidating above 60K for about, over a day now. Where did if I draw it from here, so this is the first close above 60, and I draw it over here, so 1 day, 6 hours. So yeah, like over 24 hours, like 30 hours, been above 60K, consolidating above 60K more or less. You have these few little deviations below it, but those are negligible. So you are kind of coming into contact with this trend line here. If you decide to have it drawn like that, it would make sense, arguably, that it might be better to draw it like something like this, because you still have these 2 points and this point. You cut this one out, right? But this one is a little bit more in line with the 200 SMA on the 15-minute, as well as this anchored VWAP that I was talking about. How this green is the anchored VWAP from the bear market low. So that kind of falls in line with those things a little bit better. So you could argue that it would actually be better to draw the trend line this way, the way that I have it drawn now. And in which case, you wouldn't be coming into contact with it just yet. It wouldn't be till somewhere over here that you came back into contact with it. And then maybe this 200 SMA and the anchored VWAP kind of change a little bit, and alter their paths a little bit, so that it lines up, more. They end up lining up in confluence a lot closer at that point. But I'm not gonna get ahead of myself on that. But I just wanted to point that out, that Bitcoin has been above 60K for over 24 hours now, and just consolidating and going sideways. And it's Friday. We're going into the weekend. Now, a lot of times over the weekend, all you really see is sideways. I'd like to think that after how bullish the past couple days has been, and how you got a really strong the weekly candle close on the S&P, got a really strong weekly candle, in the stock market. So closing that strong towards the end of the week, where Bitcoin has also been pretty bullish, coming out of this major low, I would like to think that we're going to continue up. Now, there are a few things that would be troublesome for that scenario to continue up. But essentially, staying above this 60K area, staying above this trend line, and this VWAP, I think that it's pretty safe to assume that we're going to be continuing to trend up. And one of the reasons why is because you can see, like, we're stepping out, taking out this short liquidity that's up top here. You still got more to go further up, and you still got this hot spot here. So it's 67,000 even. You've got 580 million. You got 660 million just a little further up. 67, 100, 600, another 600 million. So there's well over $1 billion sitting just right there, like at that 67K zone. So I think that if Bitcoin, and I said this before, Bitcoin is a master troll. and it will troll everybody. You're never gonna know what its next move is. But I would think that if it wants to catch people off guard, it would start to try to look weak, and then end up inevitably pushing. It'll start to look weak, which will entice more people to short. And when more people short, and the shorts are heavily outweighing the longs, that's when you get much more potential for like a short squeeze type scenario where the shorts are being triggered, or the shorts are being targeted, and they just get blasted. These liquidity zones just get blasted through, even with just moderate amount of buying pressure coming in. These levels get blasted through because shorts get liquidated. In this scenario, the same thing happens on the long side too, as well. Like, don't get it twisted. Like, there can be a long squeeze. Like, absolutely. Like, longs got wrecked through this whole friggin' move. So if you're longing this whole downtrend, you got completely and totally wrecked. If you did start longing until here, or here, or here, you're doing pretty good. And that's the thing, is that the majority of people stopped longing, right? And then the majority of people flipped short. So now you have a bunch of short liquidity above the price. So the price is naturally going to want to gravitate to these bigger pockets of liquidity. It's like a magnet. Like, it really is like a magnet. It's really weird. So that's just the 15-minute. If we go up to the 1 hour, you can see that you did get a golden cross on the 1 hour between the 50 and 200. You are still closing more or less most of the candle bodies, aside from just this one exception. You've been closing the vast majority of 1 hour bodies above 60K ever since this one right here. So you're also back above the 200, which is a bullish sign in and of itself, like just being above the 200, even if it's only on the 1 hour. And then, of course, you also got this golden cross. So this 60K zone I had mentioned before in some previous videos, and which is why I have this box drawn here, and I think I locked it in place. Just so, yeah, it's locked, so I couldn't move it by accident or something. And I was saying that this zone was going to be important to reclaim if we wanted to see a case for the price to reach back towards the top side of the range, being like, anywhere between like 69 and 72K, let's say. But we're about halfway there. We're about halfway there as of right now. If we just take a fib, draw it from the local top over here, you can see that we did, hang on just a second, you can see that we did actually in fact get above that 0.5 level. And so that 0.5 fib being above that's pretty strong. Like, it takes Bitcoin from being in a weaker position when it looked like we could have potentially rejected. I think I made a video saying you could take some profits here, but don't, maybe don't enter a short, but maybe take some profits here in case it rejects. But he ended up blasting back above it, and then you came down and tested it again perfectly, wicked off it perfectly. So for me to flip to the bearish side, you would certainly need to at least lose this trend line. I would assume that since you did just get the golden cross here, that we're more likely to bounce. We're more likely to fall into it and then bounce, and hopefully reclaim this 61,350 area and go back up towards, these targets right here, where we would then be putting in again another higher high, and then breaking past the 618. You automatically have a bias to go test 70K. So assuming we don't get stopped short of that. So anyway, I'm leaning more towards the bullish side because we keep stepping up on levels, stepping, rejecting momentarily, and then breaking through. You know, this level right here, you didn't hang out here very long, but temporarily rejected sort of, and then broke through it. Yeah, this massive move came back down, retested this 60K level, which is a very significant level for its psychological level, and it's just the price has interacted with it an awful lot, and it's been support and resistance for a long period of time, and there's a lot of points of contact with this area. Sorry, a lot of points of contact with that area. Um, anyway, long story short, good sign that you're above both of these. Good sign you're above 60K. Good sign you're above this box that we had drawn. The magic box. We'll call it the magic box. And then if you want to actually zoom out, I want to actually go through the oscillators as well, just real quick on lower time frames to see if there's anything eye-catching. I mean, you've got these histogram bars, you've got the stochastic doing a bullish cross coming up on the 15-minute as you're kind of almost coming into contact with that trend line, depending on how you draw it. Nothing too severely threatening right here, at least that I can notice. One thing I did notice though was you did get this higher high in price, and then you got a lower high in the stochastic RSI. So you've got that bearish divergence on the stochastic RSI, but it already played out because look, you already got this. It already cooled off completely while you were doing this whole correction. You still held above 60K when it was bottoming out, and now you're sort of building back up towards the top side. So nothing too concerning there. Anything that was is pretty much already played out. This MACD is looking like a little troublesome, but I'm not too concerned about it, considering what the daily looks like. Which the daily, your histogram bars are still lighter. They're still brighter, peach color. They're still getting smaller. This is still looking like it's getting closer to a bullish cross. Your RSI would be better if it was above 50. But look at your stochastic RSI. You're above 20 on both these. You had that bullish cross down bottom here. Right here. And then now you're above 20 in both the fast and slow smoothing line. Or fast and slow moving line, sorry. This 20 level here, that's sort of the confirmation, right? Where did you get the actual cross? Well, oops, wrong oscillator. I'll get better at this someday, guys. I promise. Just bear with me. I'll get better at this whole YouTube thing. I mean, you got the cross right about here, we'll say. I mean, that was basically, you're basically bottoming out there, dude. Like, that was that huge capitulation candle, and you got the cross right after that. So, I mean, just for some reference on that, the stochastic can be pretty accurate and pretty useful sometimes. So, having said all that, now that we're on the daily, I mean, it was arguable that you were coming into contact with this trend line that you could reject. You ended up holding 55K, and then you got this big, long, thick, massive, meaty, bullish engulfing candle on the daily. Now, these two candle bodies, well, this one has not closed yet. Obviously, it has 20 hours left. But you now have two consecutive candle body closes above that 60K area. That is also a bullish sign. So if I'm just to go back to, well, hold on. Let me bring you back to the daily, because here's something that is troublesome, right here is the fact that we do have the death cross coming in, and we rallied up into the death cross, and now we're pulling back from it. So this could be potentially the first warning sign or first red flag that the price is going to reject basically mid-range and then come down and go lower. If that's the case, like, we could see some lower prices down here. Right now, I really don't think that's going to happen. And I think if we do come down again, I don't think we're going to go lower than we did before. For now, that's how I feel. That's how I genuinely feel right now. So what would change my mind? Well, if we go back to the 15 minute with the most immediate price action, I'd say that this would... First, you would have to lose 60K and be closing multiple bodies beneath that 60K area. Multiple consecutive bodies, not just one at a time and then bouncing back. I'm talking multiple consecutive bodies. If you lose this trend line and reject from 60K and the bottom of the trend line, and then you further lose this zone and you revisit 55K and you come up and you're unable to get back above, or sorry, if you revisit what is this, 57.5, you revisit 57.5 and then you come back and you reject from this 58.5, we start to go lower. It's anyone's guess as to what level exactly you might find support. You might find it again at 55, or you might go a little bit lower. But in any case, that's what I would be looking for. I would be looking for these series of events to happen. Losing this trend line, coming back, rejecting from the bottom of it, and it doesn't have to be like right there. Like, it could be over here, or even if I just draw a whole new freaking drawing, like say it's over here, and you hit this point, instead of bouncing, you fall through it, you come back and reject, you end up ultimately losing this level, and then you come back down to 55K or something like that. That would get me to be like, okay, well, either it's not bullish and we're rejecting from the middle of the range and it is going to go lower, potentially see lower numbers, which I really don't think it's going to happen. But if we do, this would be the first signal that I would watch out for, as far as if the price is going to fail to have a sustained uptrend from here. So definitely keep an eye on that, guys. I'm just gonna go through the oscillators real quick and then I'm done, I swear. Looking good on the 15 minute, nothing really too threatening there, and that's good considering we are just going sideways, sort of weekend price action. If we do end up holding these levels, we could see a pretty good pump, like either tomorrow or Saturday or Sunday. I mean, so 15 minute, those look good. These don't look great, but I don't see anything super concerning except for like I had mentioned, that bearish divergence that already more or less played out. This is looking a little bit concerning, how we're kind of up. We came up just above and we're pulling back now, and you had this sort of double top looking thing. And now that in the stochastic, and now that's pulling back as well. But, until you lose 60K, that's probably, not something to worry about too much, because if you look on the daily, you have this beautiful cross back up, and, the stochastic has momentum to the upside on the daily. The MACD has momentum to the upside on the daily. So I'm really not worried. Still got that macro bullish bias. And I'm sticking with that for now. I guess I can get rid of this because I don't really want to keep talking about it, to be honest. But yeah, I mean the weekly candle body, it's got 1 day left, which one day, well, almost 2 days, which I will probably cover this when I will probably cover this when it does close on Sunday night. I might not do an update tomorrow, um, and take the day off tomorrow, but I will most likely be doing an update on the weekly candle close for Bitcoin. But as it is right now, you are above the 50-week SMA. What you are not above is the bull market support band. So that is also concerning because we haven't yet, only got 2 days left, but we haven't yet been able to buy back above either the 21-week EMA or the 20-week SMA. So it'd be better to be able to close a body above both at some point, and then we have a better idea as to whether or not we're going to end up breaking the top of this range on the fourth go, or if we end up, coming down again and come back down all the way into the middle of September, which could make sense. It could end up making sense. I think it makes more sense to go up a little more in price now and then come down, even if we make another lower high, then come down again, than it does for the price to just go down again. So like immediately, because that would look more scary. Also, if the stock market is pumping out of the lows, like if the stock market's reversing and pumping out of the lows, Bitcoin is probably going to be likely to follow it, at least for some time. So we do want to get it back above that level eventually. But what would be crucial, to start with, is taking back this monthly support zone at 61,350. And that's also not too far from the 21-week EMA, which might be even a little bit lower next week. So that's really still a key level that we're going to want to take back. Still got pretty good volume as far as like the weekly volume bar. The daily, this current daily, it's still kind of young, but starting to drop off in volume here a little bit. So that's something that you also want to keep an eye on. Like the price is going up and the volume's going down. That's typically not a great sign. And then if you're unable to close back above the 200 daily SMA and we actually reject from it, that's going to be a bad sign. But we haven't gotten there yet. Still got to see how this daily candle body closes, because it could look completely different in 20 hours from now than it does right now. So, it could look completely different. So just keep an open mind about that, and maybe the volume will perk up again as well. And also keep in mind, just these short liquidation zones. I mean, I'm sure that those will be targeted at some point. Now we have the liquidation data here, and sadly, it looks like more longs. It looks like we flipped back to the long side, getting the majority of the liquidations. Unfortunately, for the bulls, because you flipped back to it being, that 71 long, 31 million short. So you kind of flipped that back. You flipped it over on, I think just the 1 hour as well. But it has been it's like Bitcoin's just been trading in a super tight range. It really hasn't done much all day. So that's why there wasn't really too much discussion happening in our community chat. There wasn't too much. People weren't really talking about the price because the price wasn't really doing too much. You just go down some of these 4-hour bars here, and you can see that like these are staying really close to the center line. So I think there's just less and less people are taking leverage positions, except for the riskier ones. Whereas everyone was getting flushed out back here. Everyone was getting flushed out back here, and it totally deleveraged the whole market. It was deleveraging the market, and now nobody wants to play with leverage, and it's the weekend, so you could expect less volume anyway, just because it's the weekend. Um, and then, I mean, speaking of volume, daily exchange volume, the 7 day moving average, it did get up. It actually breached above 60 billion. So yesterday it was at like 59.4, 59.3, 59.4, but it did get back above. It did get up to 60 billion. So 60.21 billion. Yet you ended up making a higher level. So it's good to see that this chart is going up in terms of exchange volume. What we do want to look out for on this chart is to see if we can put in some higher lows there, and keep the momentum going as far as new money coming in and more money coming in and going on to exchange. And oh yeah, one more thing, the crypto fear and greed index. So I actually wanted to clear something up, something that I was wrong about on my last video, because the fear and greed, I think I was saying that it was at 20, but I don't think that, looking back on it, somebody pointed it out to me, and looking back on it, I don't think that it was actually at that level. Like, I don't think that was accurate. I was saying that it's strange that the price is going up, but the fear and greed is still so low. And I think what happened there was I failed to actually hit the refresh on the page, and it didn't give me the up to date. It didn't give me the up to date info. So really, we were at like realistically 40, between 40 and 48, probably when I was making that video. So those numbers were inaccurate. So I just wanted to point that out, and that I had misspoke, and made that mistake. But so it looks like as of right now, where we're at is 40, which, we've stepped down from where we were yesterday at 48, but we are still, higher than we were. I think at one point, like last week or the week before, we were at freaking like 15 or something crazy, and I was like, the last time we were this low was at the bear market low. You go back and see if you can watch my video on it from, I think, I don't know, it might have been like August 4th or 5th or something like that. I honestly don't remember. But yeah, fear and greed is at 40 now. It's kind of it's a little bit alarming that it has jumped up so high so quick, like jumped back up to 48 so quick after that big capitulation, flush out, deleveraging, liquidation event. That is a little bit concerning. But I mean, it also just says, like, hey, there's money that's willing to come back into the market, and that's what makes the price move. So anyway, yeah, it'd be good to see the price hold above 60K. I have to wait and see how this daily candle closes. And if you guys don't hear from me about that tomorrow, then I don't know. Just keep an eye on this zone between 58.5 and 60K. Basically, you really don't want to lose that zone. If there's something that of the most importance, it's that you don't want to lose this zone. I mean, here you have this big fat bullish engulfing candle. This one, came down, wicked into the area, and then ended up closing above it. Let's see what this one does, how it closes. But ultimately, you don't want to lose this zone. You don't want to lose 58.5 for sure, because then that would almost put the probability on the side of coming down to visit the similar prices to what we've seen already. So anyway, I'm going to go ahead and wrap it up there because the video is already going to be pretty friggin' long, but just wanted to give you a couple of updates on that, and I will see you again in the next video. Oh yeah, remember to annihilate that subscribe button. Just smash that like button like it owes you money, and just obliterate the subscribe button if you like the content and you want the updates. So anyway, having said that, oh yeah, also comment down below if you didn't like the video. You can put a thumbs down if you want. Just tell me why in the comment section, and I'll work on it. Anyway, hope you all have a great weekend, and I will see you again back in the next video. Peace out.